Apple's newest iPhone, the 3GS, goes on sale today, ending months of anticipation. But for investors, some key questions remain. Just how many people will buy the new product? And will a 50% price cut on the old iPhone be enough to lure new customers? Here to answer those questions for us, a veritable superhero in the eyes of those Apple investors, Piper Jaffray's Gene Munster. Gene was the first analyst to predict that Apple shares would hit $100. Seems like a long time ago now. And he was among the few to foresee the significance of the iPhone. He rates Apple a buy, and he's here in the studio with us this morning. Gene, thanks so much for being here. We've got an opening weekend sales figure to consider. It almost sounds like a movie, really. How many iPhone 3GSs does Apple need to sell, in your opinion, to satisfy the investment community?
We think about 500,000. To put that into context, I think they'll sell about 5 million phones for the quarter. So this is just 3 days. 500,000 is a strong number. That compares to a year ago. They sold about 1 million when the 3G originally came out. So it's going to be big, but it's not going to be as big of a blockbuster as the 3G was last year.
Now, I've actually heard some higher figures, 700,000 I've heard, perhaps even a touch more than that. Are you concerned, perhaps, that too much anticipation may be in store for this product, and that if it doesn't hit those high estimates, stock price is going to take a hit next week?
I think this weekend, yes, that is a concern. I think that if Apple doesn't put a press release out on Monday saying they sold 1 million, some investors will be a little bit disappointed by that. But I don't think it's any surprise that this phone isn't as impactful as the 3G phone. So I think, yes, it's some risk, but at the end of the day, this phone is the best phone out there, and over time, I think investors are going to be rewarded for that.
That statement inspires a lot of questions. Let's get to at least one of them, the impact. The skepticism right here seems to be centered around the idea that there just isn't enough here to lure new customers or perhaps persuade existing 3G owners to upgrade at what may be a steep price. Is that fair?
That is fair. I mean, at the end of the day, it's just a faster phone. It's a better camera. It also adds video. So it's going to be a little bit tougher to get some of those upgrades. The real key here is that $100 price point. Basically, Apple cutting the price of the existing iPhone to $99. That's a magic price point. We've gone back and done the sensitivity. Typically, when they cut price by 50%, demand doubles, and the street's not expecting that. So you're right, as the new phone isn't going to be as many bells and whistles as some people like, but the real story here is just that $100 price point, which is magic for consumers.
Okay, that is key, though, because we hear so much about the 3GS, the new product. Everybody likes to see the commercials, the video on the Apple website. But it sounds to me like the old 3G, the one that's being sold for less now, is the dark horse.
It's absolutely the dark horse. And typically, to put it into context, is about 70% of units that are sold are typically the higher priced units. In this case, we think it's going to be more of a 50-50 split because the price is so compelling. At the end of the day, consumers really are attracted to that $100 price point.
Now, what is the impact, though, for investors? Obviously, well, one would assume, based on what you're saying, and logic perhaps, that Apple is going to do a whole lot more in the way of volume. What happens to margins, though? There's so much more competition in the smartphone space. You have the pre-out. RIM keeps rolling out new products, also at sensitive price points. What's going to happen to Apple's margins?
Well, we've got a good read on that, and at the end of the day, we think they'll probably maintain their margins. The reason is that when Apple basically buys the components for it, they're buying on next year's future. So at the end of the day, they're taking advantage of huge volumes they're going to have next year to maintain the margins today. So we don't think that there's going to be an impact to the margin despite the $100 lower price point.
Okay, now as I told everybody when we started off here, you have been prescient when it comes to looking at Apple, not just as far as the stock price is concerned, but the impact of new products. What are you looking ahead to? What is going to be the catalyst for Apple's next phase of growth? Does it need to be, for example, abandoning carrier exclusivity with AT&T and allowing Verizon in? Or do we need to see Steve Jobs pull a new rabbit out of his hat?
Well, probably for the next 6 to 9 months, it's going to be about the iPhone, really the growth in the iPhone with this lower price. But beyond that, we think the living room is going to become an increasing area for Apple. We think that in the next 2 years, you're going to see more innovation in that front. We're going to see probably a new Apple TV in September. And so I think not a lot of investors are focused in on that, but Apple has some opportunity to really reinvent the living room, even work with AT&T to reinvent the living room. So,
well, let's explain to people what you have in mind there, because the Apple TV that we've seen thus far, to many people, has been a bit of a disappointment.
It has been. At the end of the day, people spend a lot of time in front of their TV, and so Apple sees that as an opportunity. Basically, imagine being able to watch the video content from Hulu on your TV and have better control over your digital recorder, better control over your TiVo, also redefining the whole experience.
All right, Gene, thank you so very much. Great of you to join us right here in the studio. Gene Munster from Piper Jaffray, folks. We've been talking about Apple and the iPhone.